Hi, Ben Black here with Acadian and the Raise Summit. And today we are very pleased to have Benjamin Ratz with us. Benjamin, how you doing?
I'm great. How are you, Ben?
I'm great, and great name you have. And in full disclosure, Benjamin is an Acadian LP, but is also a very active investor in all things tech, uh, and also has one of the most diverse venture programs I know. So, Benjamin, give a little bit of your background and how you end up building up this very large venture portfolio that you have.
Of course. You know, I'm a commercial lawyer, post MBA turned VC. In the past 8 or 9 years, I've been venture mainly as a direct investor. Then for the past couple of years, I've been working together with David Helgeson. David co-founded a company called Unity Technologies, which had a very successful IPO last year. Unity is not just the world's largest game engine, but also one of the most downloaded pieces of software on mobile um, today. That means that from we've been investing into technology and venture out of curiosity and sort of with a desire to learn more about the space, but more so that today, if you think of the fact that or most, if not many, if not most family offices come into technology, um, dipping it into it. They come usually there's some kind of single asset that people are selling out of, and they're diversifying a little bit into technology. We are the absolute opposite of that. So, uh, literally all the wealth in this family office comes from technology. That means we've got pretty strong existing networks, and also see an increasing number of operators and angels that we've worked with in the past that are professionalizing, and we partner with them as emerging managers out there. We also have a number of old existing relationships with the classic tier one franchises of the world, where we also invest.
So, how many managers are you in roughly?
We are at present north of 20 VC funds.
20
And it,
VC.
did- and it
So you talk about like a little bit about it, like how did you like what percentage of those funds did you know like from your previous life, or did you, or these relationships you made along the way? How did you find these VCs, and what was important in you making the decision to partner with them?
I'd say somewhere between 50 and 75% we had some kind of relationship with uh, prior to engaging. Uh, then increasingly so, we also do a lot more outbound. So we're direct investors in a lot of companies. Um, that means that we're increasingly also looking at cap tables and external data sources to understand participation and those that are part of category defining companies and managers that we sort of or investors that we like, and we're increasingly also building up an outbound practice. Needless to say, we're big believers in serendipity, which has been an increasingly a challenge in the pandemic, where more and more business is done in closed loop networks. I guess raises the exception to that, obviously bringing people together online in a conference setting. But for us, serendipity is definitely also a part of what we do, and we haven't been able to do that.
So is your outbound effort, is that based around like sort of proactive themes that you guys are looking for? I could talk a little bit about that, and is that, or is it just like looking to try to meet more people, or how do you think about them now? Because it's not many LPs are too outbound. Usually they stay inside and they lurk around and wait.
So so we do, especially because we're doubling down on fundamentally backing transformative ideas for an ecological crisis. And in that context, we define the world in a few different buckets. We put the moonshot buckets and things that don't really exist today, and second bucket of technologies going into an a deployment phase or software to be running on top of these technologies. And finally, we also look at those that are financing various type of IoT solutions for an ecological crisis, vertical farming, and similar type of plays. That means that when we're we're heading down for us a thematically new area, we're doing a lot more outbound work and actively trying to get to know. Well, we start by building, internal conviction lists in how we think about the world when it comes to what are the category defining companies today, who were early investors in these companies, who are the sort of critical people that we should get to know here, and then we try to build an understanding both from founders and operators in these or of these companies, who are the best investors out there, who are the most helpful. Why were they the most helpful? Was it purely based on those that had the foresight to go into this pressing area a couple of years ago, or those that are catching on to it a bit later, and sort of what is the angle that they're bringing to the table? So that's one sort of theme, broad, or one of it is our major theme, I should say, right now that we're trying to understand it. Obviously, we still do invest in sort of traditional venture such, but that is, it's in a sense, it's more staples for when you come from technology, that part. And another theme that we're sort of looking into right now is that we're trying to gain exposure more to emerging hubs and geographies. So we've done, and we're by no means done with that analysis, but we're thinking a lot about what are the emerging hubs of the world. The world has been flattening out in terms of access to talent for a number of years, and it means that just last year, last week, UiPath out of Romania went public on the New York Stock Exchange, and I think few people could have imagined that just a couple of years ago, that Romania would surface to such a talent hub. So we do think a little bit about these emerging hubs, as we call them, whether they be Romania, or if it is Turkey, or further out.
So, I mean, you have such an interesting position because you've been an LP, you're a direct investor. You kind of can see the industry. You've been, obviously an operator as well. You sort of see the industry from all these angles. Like, what advice for emerging managers? What do you wish that new venture capitalists did better when they work with you, when they approach you, when they try to partner with you? Like, can you give me some advice to the Raise community about how to be a better VC from an LP's perspective?
So I think there are a number of things that we like, and there's a couple of things that we perhaps like less about being an LP. I mean, first of all, we absolutely love the asset class, and we're very long technology. I think always when you are an investor in a fund, there's a slight disconnect from the companies. You're obviously investing to get a certain type of exposure. There is that disconnect in feeding up information, which is I think, though, many of the managers that we work with quite a lot are very transparent with both with us and with their CEO, with their portfolio founders, and sort of try to connect where helpful, instead of trying to act as gatekeepers to the people. There's often a scare of people sort of going direct or similar, and I'm not sure it's always prudent. What I think, especially in a hyper-competitive market, and the sort of what we now are living in a, hopefully soon post-COVID, but we believe that we're in a post-series world, at least. We're all at seed, or seed managers are competing with larger funds for these types of deals, how people win these deals, and putting what that weapon, charm, or whatever it is that makes people win deals, and their ability to pick right, um, and communicating this, that with the combination of what we've seen recently, right, is that there's a little bit of a sizing problem historically. And Ben, I'll credit you to this as well, right? When you do the number crunching on the funds, smaller funds have historically been better performers. Now, with more capital being allocated to the venture class, a couple of funds are sort of getting bigger and bigger all the time. And for us, that poses a bit of a problem in that we're not sure that this is always good, that funds keep on getting bigger and bigger. But having the right, the sizing, the strategy, and the fund size that they actually align is really important. Also, I think, it's one thing to speak about, and that also comes into sizing, right? And that is the alignment of interest when it comes to follow-ons, SPVs, etc. I'm not going to say most, many LPs want some kind of direct access, or sort of the ability to double down on
Yeah.
companies. For fund managers, this often causes, on the one hand, it's excitement and great, and an opportunity. At the same time, we also see that many have, they lack the operational ability to actually pull it off.
Yeah.
Spinning up SPVs is, on the one hand, it's super simple and it's pretty standardized, and there are a number of service providers that help people automate most of it.
Yeah.
Yet it still is pretty difficult to sort of, there's a lot of.
Yeah, no, I was about to say, like, people always think that, have done so many SPVs, right? And so we've got this process like down, and I'm always counseling managers on like the unexpected challenges of pulling this off. And it's not just like, hey, look, I have a process, like I can spin up a company to do the back office. Like, that's easy. It's really managing the relationship with your company, the relationship with your LPs, your different kind of LPs who have different kind of risk tolerances, and be able to communicate usually like a later stage deal. These are very different decisions. So to your point, I think it's always much harder than it looks. I agree with you.
I mean, yeah. Just while we're speaking now, I see that I've got a couple of notifications on my WhatsApp from one GP, and I'm pretty sure because what that is about, because that's typically the way they organize SPVs, right?
Right.
And you also, this versus others that have a more automated or different type of process for it. The WhatsApp way is difficult to scale.
Yeah.
I would say.
Yeah, and then also underwriting what makes a good growth round versus what makes a good seed deal is very, very different. The same managers, it's rarely you have a seed manager that really understands how to do growth. It's not necessarily their business.
It is, and this is like one. I mean, when you look at it from the other perspective, growth investors doing seed, which also helps, right? Because so right now, I think there's quite a few people in the industry, and me included, that are trying to unlearn some of our learnings from the first couple of years, including the hurdles of getting to Series A, B, and beyond, and sort of the metrics, the valuations, and more that would typically be that until 12 to 18 months ago was accompanied by each stage, and that's I'm not sure it's true anymore in many other cases, right? And we will know in a couple of years probably what the outcome actually was, because that is this is the tricky part with venture, right? Mike doesn't tell the whole story.
No, absolutely. Yeah, well, I mean, like right now, this is the best time for venture returns in history, and everyone's getting markups and all over the place, right?
Right.
one would say that this is the scariest time to invest. You know,
Absolutely.
so
Uh,
it's
uh, that, but then, there's never been a greater time to be in the early stages. It's like that the risk tolerance has changed a bit. We then also, and for the late stage folks as well, did people anticipate 2 years or 3 years ago that there would be 500 SPACs chasing targets in the late stages to be providing liquidity to late stage managers?
yeah.
I certainly did not anticipate that, and I don't believe many that say they did.
No, I totally agree. It's and that's why in every era, I always think that there's opportunities if you're, where if you know how the systems work, that there's always a way to find a great investment, in every environment. People, I remember back in 2000, not to say, make myself feel old here, but like 2006, 2005, 2004, John Doerr at the stage of the NVCA going, there's twice as much into capital in the industry that the industry can take, you know, and who's going to leave, and bottom
Yep.
line is it's been an endemic problem for a long time. What one piece of advice would you leave like new managers with to think about when they're building their business that you really wish everyone knew? Just one piece of advice.
I don't think that I have the single source or one piece of advice for it, but fundamentally we look it is a very human centric business, right? People or GPs forget the fact that themselves putting a lot of emphasis on we invest in people, we invest in founders first, right? That many LPs will think in a very similar way.
Yeah.
And everything you do that your deck, etc., this communicates back to people, interactions, and how that goes. I think it's pretty, from our best GP positions, it is a very collaborative approach, and it's been collaborative from day one, even in cases where we've said that we're actually not ready to commit just yet, and people are okay with it. Like, this is a very long-term asset class.
Yeah.
So I think you really have to be thinking about it in a very long-term type of way.
Yeah.
I'm not sure if that's very helpful, but that's my best.
Look, this is a long-term method. I always feel like people don't really understand that if you're going to be successful in venture as an LP or a GP, you have to be willing to like spend 20 years at it. You know what I mean? Some people
Oh
can make
yeah,
it,
yeah.
you know what I mean? Like, but you have to be like, I'm committed to this for 20 years. And if you take a 20-year view, you will be successful at
Right,
this. But you need to take a 20-year view.
right.
And
Absolutely. I mean,
people don't, and so, people are rushing into it right now, and I'm like, this is a terrible time to start. you know,
no,
but
absolutely. And in that, like, you're the a couple of current Series A marks, is this what's going to make the delta in 20 years? I'm not sure.
nope, we won't.
I'm not sure.
And many of those marks will amount to nothing, but some of those marks
But
will.
this is the business that we've chosen.
This is the business that we've chosen. And on that, Benjamin Ratz, thank you so much for taking the time to talk with us today. We at the Raise community, we really appreciate it.
Thank you, Ben.